In today's video, we're going to discuss these three funds that are blowing away Yieldmax as of late. Yieldmax helps me earn over $450,000 per year in dividends, as you can see below, and our performance shows that we're blowing away the indexes with Yieldmax and some margin. We're up 42% for the year. The SP is up 25%, the Nasdaq's up 28%, the Dow's up 16%, and the Russell's up 18%. So we're beating all of the indexes on a year-to-date basis with Yieldmax and margin, which many people say can't be done. We're also up 17,000 today, or 1.08%, which, as you can see above, blows away the indexes. So we're beating all of the indexes on a year-to-date basis and on a daily basis, and we're living financially free out of our brokerage account as a result. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. Of course, we're up more today than the indexes because of Bitcoin. Bitcoin had a great day, and Yieldmax has some interesting Bitcoin funds. But today I'm going to recommend to you three other funds that have been blowing away Yieldmax, and they're much more traditional than Bitcoin stocks because you can't base all of your fortunes on Bitcoin, as you know. Bitcoin is not proven, and it doesn't pay you in a bear market, especially during 2022. Again, Coney and Misty have been doing great. Even Tesla has done well since our last call on election day, if you saw that live video. But we're going to be focusing on better long-term plays that help you grow your performance safely and avoid margin calls in the process. This margin debt that I have on is not as risky as you think, because if you saw my last video, I keep a lot of low volatility names in my portfolio to offset the volatility from Yieldmax. Also, this margin interest is low interest. It's around 6%. I've negotiated down twice. Many of my clients who bought my e-guides did the same thing, because when you buy my e-guides, you get my phone number for life. So I'll text you the script to negotiate your rates down, and you can call me whenever you have questions about your portfolio. So where can I get my growth without the elevated risks from Yieldmax, but still get similar dividends as Yieldmax? Well, the answer lies in compounding, okay? And I'm going to give you three funds that help you compound your wealth faster than stock-based ETFs like Yieldmax specializes in. As I always say, it's easier to make 20K on 100K than it is to make 20K on 20K with Coney. I can't put 200K in Coney because we don't know what Coney's going to do in a down market, but I can definitely put 200K into the indexes and make 20K a lot easier. That's why I put so much into RDTE lately, which is the first fund we're going to cover today, Roundhill's RDTE. If you go to a chart of the Russell, you'll see that it's absolutely been on a tear lately, okay? We've been pounding the table on small caps this year. Small caps are finally due for a run. They've done largely nothing for years. So I think now is the time to buy small caps because we have rate cuts coming. We just had another series of rate cuts. And now we have Trump in office, who's going to promote tax cuts and all kinds of growth to stimulate small businesses because he's a businessman himself. So I like small caps, especially with lower rates. And IWM is the small cap ETF for the Russell 2000, but I prefer RDTE because RDTE actually pays you a dividend and gives you qualifying income to live free from a 9-to-5, because you can't use stock gains to qualify for loans from a bank, okay? Banks want either pay stubs or dividends to qualify for a loan. So I need loans to not only level up my account with new funds that I bring into my brokerage account because I qualify off of these dividends. See my past videos on how I use loans to level up my account if you haven't seen that already. But I also need loans to just live freely from a 9-to-5. I need a house, I need a car, and banks need dividends once again for that, not trading gains. Trading gains are too up and down, especially Russell 2000 trading gains. Again, the Russell did nothing for about 10 years. So I like RDTE because it actually gives you movement. It goes upward, left, or right on its chart, as you can see here, but it gives you a nice dividend. Roundhill dividends usually pay anywhere from 30 to 50% dividends. So I like this because I'm getting my growth with the Russell, I'm getting dividends to qualify for loans, and I'm getting the safety of a diversified index in the Russell 2000. The Russell 2000 has a lot of Bitcoin plays in it itself, okay? So it has a lot of Bitcoin miners. It has a lot of other mega growth plays in it that help you get your growth and offset Yieldmax erosion. But you want to do it with indexes like IWM, but why not go a step further and go into RDTE because it moves up with IWM, but it also gives you that dividend to live free from a 9-to-5. Also, we don't know what the Russell's going to do in a down market. They don't pay your way in a down market. They don't pay your bills, but RDTE will always pay you something in a down market, so you'll eventually cash flow anyway. That's why I like buying these funds on margin, because my margin debt is really not a risk when my dividends pay back my leverage in about 1 year. And again, I get to pay my bills with RDTE and qualify for more loans with RDTE as opposed to IWM. I even like IWMY, which is a fund by Defiance, our second fund for tonight. IWMY, as you can see below, is blowing away its index. IWMY gives you a little bit bigger dividend than RDTE, and it moves down less on down days typically. Okay, so you need Roundhill for up markets because Roundhill helps you raise your dividends in up markets and gives you growth in up markets because they sell calls, and Defiance helps you in down markets because they sell puts. So when the market falls, you actually increase your dividends with Defiance funds, and Defiance funds fall less than Roundhill usually on down days. So that's why I like to add in IWMY with RDTE to get my Russell 2000 exposure. Again, look at this chart of IWMY here. It's blowing away the indexes. But if you go to a chart on E-Trade, you'll see that IWMY goes sideways to down. So people are going to complain and say that this is eroding too much and they don't like to be in Defiance funds. But again, I just showed you the total returns on Morningstar, and this proves that IWMY is blowing away the indexes and providing you qualifying income to live free from 9 to 5 in the process. I also like the ability to sell options on Defiance funds. So I sold options on IWMY and QQY. As you can see, we're up significantly in these sold put options. I use these put options to not only lower my margin, so I've lowered my margin by about 10,000 just by selling these put options on Defiance funds, but I also lowered my risk because these huge premiums that we receive in these put options from Defiance lower my cost basis to a point where I'm actually controlling Defiance funds at a much lower price than everyone else is controlling it at the current market price. So I love selling options to lower my risk and lower my margin. If you need help selling options like I do, that's in my volume 6 e-guide. So I love Defiance for its defensive nature, and I love that I can sell these options and gain exorbitant premiums in the process. Last but not least, I have to throw in Cornerstone because Cornerstone has been blowing away everything that I know of as of late. Here's Cornerstone right here, was up another 2% today. Look at this breakout from 850 to 9. This has been absolutely phenomenal by Cornerstone, and Cornerstone gives you a 20% dividend with these days gains. So it gives you 20% dividends per year, 20% premiums on average, and you drip that 21% dividend down at the NAV for 26% gains every month. So this is why Cornerstone is so special. On Morningstar, it's a 5-star fund, and Cornerstone is my best vehicle for growth and compounding my returns because not only are you getting these days gains, but they're dripping those gains down at the bottom for 26% gains every month. So Cornerstone is a 5-star fund for a reason. It's been around since the 80s. You can't really beat Cornerstone. So that's why you have to put your money in Cornerstone, because it compounds your money better than single stock ETFs, because we don't know what a single stock is going to do in a down market. Stocks have headline risk. Indexes don't have the same headline risk. And then when you put all of your money behind the indexes, you can make money a lot easier with index plays. Cornerstone is also 30% maintenance, whereas Defiance is 50% maintenance. Many Yieldmax names are also 50% maintenance. That's why I also like QQQY with Defiance, because that's actually 30% maintenance. It's the only Defiance fund that I know of that's 30% maintenance, and Cornerstone is 30% maintenance. So I have to put most of my money in Cornerstone. And again, why not when it's outperforming everything that I know of at the moment? If you need help understanding maintenance, that's in my Volume 3 e-guide. So Cornerstone's had a huge run, as you know, and as you can see on this chart, it's up against the 200-day moving average. So I've been protecting my Cornerstone position by boxing it, as you know. My box positions are down a little bit right now, as you can see below, but that's okay. That means that our longs are absolutely killing it, and I don't mind these losses right now, because when the rights offering comes, we're going to use these box positions to absolutely make a killing during the next rights offering. That's how you play Cornerstone, okay? That's why it goes sideways to down on its chart. If you look at a 10-year chart, you see it move sideways to down, but on a 1-year chart you can see that it's just going to the moon. That's because it goes down between its rights offerings, and you have to play Cornerstone properly between its rights offerings. If you need help playing Cornerstone, that's in my Volume 4 e-guide. When you buy my e-guide, you get free access to the Discord chat room for life, where we alert you of the Cornerstone rights offering announcement. We have over 1,000 members here in the Discord chat room pursuing the fire lifestyle, so we're all on top of this rights offering announcement together with Cornerstone. It's how we really level up our account, because you get to pocket those 20% premiums, 26% premiums now, and then you get to reload your gains right after the rights offering. So after Corona, as you all know, I started with about 15,000, and I got my account back up to 100,000 because of Cornerstone gains. Cornerstone was up almost 100% during 2021. The premiums in Cornerstone were north of 40% in 2021. Many people think that Cornerstone is going to get 40% premiums again this year, because we're going to see a dividend raise next year with Cornerstone. So there's a lot to be excited about with Cornerstone funds. And just in case people are worried about the recent run up and it's up against the 200-day moving average, so that's causing some people to worry, well, I'm just boxing my Cornerstone positions here. And that way, when Cornerstone falls either from just being up too much or when the rights offering is actually beginning, then we'll make a lot more money on the downside with our Cornerstone box shares. Cornerstone box shares also lower my maintenance to 5% because I'm boxing against the long. So if you need help boxing Cornerstone like I do to protect my position, that's in my Volume 5 e-guide. Also in my Volume 5 e-guide is how I hedge my portfolio with put options to insure my account in the event of a 20% correction. So I sell these put options to go long, as you can see here, but then I buy my put options to insure my account in the event of a market crash. All right, so if you need more help doing what I'm doing, living financially free out of your brokerage accounts using Yieldmax, Roundhill, Defiance, Cornerstone, and some margin, email me for my e-guides at aikentodd48@gmail.com. We're blowing away all the indexes with our approach. We're up almost 43% for the year. So you can call me anytime and I'll help walk you through your portfolio on how to get your performance up like mine. Okay, if you like my video and you want more content like this, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.